Hey guys, so the fall market is here. You're jumping back into the market, you're ready to buy a home, but you're not sure which loan type is the right loan for you. Stick around, we're going to get into that today. Hey guys, welcome back to the channel. It is your realtor Nick Isgro with eXp Realty here in Central Maine. As you know, on this channel we cover all things real estate here in the state of Maine, particularly in the Central Maine market. And today I want to jump right into all of the most popular loan types that we deal with when we're working with our buyers in the Central Maine market. Of course, I want to disclaim up front, I'm not a lender and this is certainly not an exhaustive list of all loan types. These are really the most popular loan types that we see and that you are likely to want to have a discussion with your particular lender about when you go to get pre-qualified for your mortgage. Of course, every aspect of this is going to be determined by what size down payment you can make, what interest rates you can afford, the property type that you're interested in, and so on. This is really just to get you moving forward in the right direction. I want to jump right in at the top of the list with the absolute most popular loan type. Now, this is a loan that is oftentimes associated only with first-time home buyers, but it really is a loan type for anybody, and of course I'm talking about the FHA loan. An FHA loan is backed by the federal government and people like it because it only requires a 3.5% down payment. Now, the FHA loan can only be used on your primary residence, so if you're looking for a second home, a vacation home, or an investment property, this is not going to be the loan type for you. And in particular, it can be accepted for credit scores down to 500. Now, I want to give you a little bit of a caveat that if you have a credit score between 500 and 580, you are going to need a 10% down payment. So your credit does factor in a little bit here too. I also want to mention that a lot of lenders might have particular lender overlays on the criteria here where that particular bank may not accept you if you have a 500 credit score. So sometimes you'll hear people say, well, look, I'm looking for the FHA loan, I have a 550 credit score, I've got my 10% down payment, but I can't find a bank to approve it. So that might take a little bit of shopping around if you are in that lower credit criteria. Another advantage to the FHA loan is that it actually has a lot more flexibility when it comes to your debt to income. FHA loans do typically have, with the federal government standards, a debt to income ratio of 57%. So as you see when we get through the upcoming loan types, it's going to be, that's a little bit higher. So you're allowed to have more debt under your belt when you get this. And again, that doesn't include any particular other credit overlays that that bank that you're dealing with might have. Now, with a 3.5% down payment and on the FHA loan, it should be noted too that you will have private mortgage insurance as part of your monthly payment going forward on that loan. The next loan type I want to get into is a VA loan. Now, I want to say up front, VA loans are often the most understood loans, but these are excellent products for military veterans and their spouses. The biggest advantage to a VA loan is that they allow 100% financing with no mortgage insurance. That obviously is going to allow you to buy more home for the money that you might have set aside in the bank for a down payment. Considering you don't need a down payment, they will offer 100% financing and again, no mortgage insurance on that. VA loans often going to have an acceptance level on your credit of a 580 or above credit score and a debt to income ratio of 41%. So you can see right here, the VA loan is going to be a bit more stringent when it comes to your debt load as opposed to the FHA loan. Another caveat to the VA loan is if you're looking to buy a condo, because you do have to go by an approved list of condo associations through the VA. So depending on the condo association that you're looking at, you may or may not qualify for the VA loan. That's something that you're going to want to verify, but you can talk about that with your lender. They do have some spot approvals for certain condos that may not be on that list, but that's an entirely different conversation and one that would be better off had with your lender. The third type of loan that we want to talk about today is the conventional mortgage. Now, typically when we think about a conventional mortgage, we do think about a larger down payment. Oftentimes 20% is what you're going to see, although there are some lending institutions out there that are going to allow a conventional mortgage going down to like a 3.5% to 5% down payment. However, if you're going to make a 3.5% down payment, oftentimes based off the conventional loan interest rates and payment structure, an FHA loan is going to be better for you in the long run. The flexibility that you get with a conventional loan is that it can be used for any property type. So this could be for your primary residence, it could be for a second vacation home, it could be for an investment property. This really is the universal product for residential lending. Like the VA loan, a little bit limited when it comes to the debt to income ratio. Oftentimes you're going to see a conventional loan capped at about 43% debt to income. So given the larger down payment requirements and the debt to income, you may qualify for less house than you would on one of the other loan types, depending on how much money you have in the bank. Also, if your down payment is less than 20% of the value, you are going to have that private mortgage insurance. But with a conventional loan, as soon as your home value rises or your payments catch up to that where you have 20% equity in the home, you should be able to easily refinance at that time and get rid of that private mortgage insurance and ultimately lower your monthly payment if you had that from the get-go. Credit criteria also going to be a little bit tighter on a conventional mortgage. Typically 620, 630 is going to be the lowest credit score, although again, this is going to depend on which lending institution that you talk to. A lot of them are going to have a little bit higher criteria than just the base that we're giving here today. And ultimately with a conventional loan, the rates are going to be determined by your debt to income, by your credit score. So depending on where your credit is on that scale could depend how much the payment's going to be, because the rate can go up and down depending on all of the specific criteria. Last but not least, I want to mention the USDA Rural Development Loan. We don't see these quite as much, but they can sometimes be the best loan product for you, although you want to specifically seek out a lender that is an expert in these things, because if someone has never dealt with the USDA loan, they're going to have probably a little bit of trouble getting this thing to the closing table. USDA loans are available at 100% financing. Oftentimes they'll kick in some of the closing costs too. The caveat of that is it has to be in a designated rural zone. So folks, these are the major loan types that we have out there. Again, FHA, certainly by and large the type of loan that I see more often than any other. VA loans, great for veterans and their spouses. Conventional mortgage, probably the strongest product that you can bring to the closing table, as well as the USDA loan that is a little bit unique in itself. If you are currently out there on the market, if you've already jumped in or if you're thinking about it, I would love to have a comment from you down below just to hear what your experience has been. And in particular, if you've ever closed on any of these loans and maybe you've closed on more than one type of loan, I would love to hear what your favorite product was going from one to another. Remember, this is also simply not an exhaustive list of loan types. And if you want to know a little bit more, I would recommend that you kind of bring some of this knowledge to your local lender. If you don't have, by the way, a trusted local lender, I would ask you to reach out to me. Feel free to give me a call, send me an email, text, comment down below even, and I would be happy to connect you with some of our great local lenders here in the Central Maine market who are well-versed in all of these loan products. That's it for this time, everybody. Again, my name is Nick Isgro with eXp Realty here in Central Maine. If you have any questions about real estate in general in this market, never hesitate to reach out. Until then, I'll see you next time.